Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, the morning after is upon us. That was a wild night. That was a wild night. It was a unprecedented night in modern political history, whatever your leaning is. And where we go from here is going to be fascinating. Just plain fascinating. So um, let's talk about the tape. So we did 2150. We were looking at 44 last night, then we were looking at 50. 50 held. 50 had been resistance for a while. If you draw a line from 50 going back, you can see that 50 had been an issue for the bulls going through, and it stalled there. It was obviously a lot more about the returns than it was about anything else. When they dropped it down, they dropped it down really hard. They took it limit down, stayed limit down for 15, 20, 25 minutes. And then you got the ramp. So where does this leave us headed into today? One of a couple of things is happening right now. Either we are in a flaming bear market rally, okay, and it's sure acting like it, right? 90, basically 90 off the lows. If that's the case, then I think they squeeze them a little more, and then you'll see a reversal sometime today. And that reversal over the course of the rest of this week would have to result in a lower low. You make a lower low, you lose 28.5, and then I think the market starts to print things with a 19 on the front of it. Okay, because at that point, 2000 simply becomes a magnet. We've seen it many, many times before over the years. So the bulls at all costs want to preserve that reactionary low from last night. The other thing we've seen many times is that you usually don't get to make that kind of a low in the middle of the night and get away with it. Typically, over time, it goes back and gets tested. The issue becomes, what are they going to do with it? The other option is 2028.5 is the low. And we are going to make some kind of we're going to do a full V today. We're going to get above 2152. We're going to go see 2168. It's very unpredictable. We traded it initially in the room, but there was a point when it started to drop off and really started to drop out hard where I stopped. I told the subscribers, we're not going to do this as a room. It's moving too fast. And, I always tell people my number one job is to not get you hurt. Okay. Job one for me is to not get you hurt. And if you're a small trader, if you're a if you're an inexperienced trader, the last tape on planet Earth you should have been trading was what was going on last night. Because if you're wrong, especially with the increase in margin requirements at a lot of brokers, if you were wrong, then you wake up this morning and you don't get to trade anymore. And that's not worth it. It's really not worth it. It's not worth the potential to make money. So we stopped fairly early on, and we sat back and watched it. We've done some trades since, and it's been going fine. But during those really, really volatile times, unless you're a complete pro, you have to stay away. So what a lot of people are going to fight against this morning is that whole fear of missing out thing. Oh, it went up, and then look, it went down so far, and I just woke up and I walked in and I missed 90 handles. No, you didn't. You didn't miss 90 handles. You weren't going to trade that. You don't have the equipment or the heat taking ability to trade that. And when you start to blame yourself for things that you can't control or things that you shouldn't have been in the first place, that kind of rose-colored hindsight will infect your brain as a trader. So you need to let that go. Okay? If they jammed it down last night, they whipped it back up. 9:30 is going to come, and then you trade what you see with the same set of goals that you trade on any other day in this market. For us in the room, that's 4 a day. That's what we're going to do. We're going to get 4 a day. We got our 4 yesterday. We got our 4 the day before. That's just what we do. It's what we're going to do. It's what we're going to do again and again and again. Because that consistency is what builds stuff up. So I'm mostly speaking to the people out there that are not in the room. You need to be careful today. You need to control size. You need to respect risk. By the function of the volatility, you're going to have to use wider stops. And if If your risk model doesn't support using wider stops, then you need to do not a damn thing today. Just sit there and watch it whip around. It's going to be very, very whippy off the open. I would imagine that there are certain very popular platforms out there that probably aren't going to be able to handle this open, in which case you're going to be sitting there and you're not really going to know what price is. And in that situation, you can't trade. Things will calm down. The nice part is they'll calm down to about 2/3 of where they are now, and that is really as a sweet spot for E-mini intraday trading. And I'm very excited to get into that sweet spot because that's going to carry us through at least to the inauguration, in my opinion. There's some good trading ahead. All right, please be careful today. All right, everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website. Come check out the chat room. You know, trading this stuff by yourself when you only have your head to rely upon in a complete vacuum is a dangerous thing. So if you don't come and see us, come and see somebody, because trying to trade this stuff every day by yourself, you can get yourself into some serious trouble. I will be back tomorrow morning with another webcast. Trading well, everybody. Be careful out there.